Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. Monday, April 27th, 2026. The indexes printed fresh records, but the tape felt like a knife fight. A narrow crew, AI leaders and the banks, kept the benchmarks afloat, while defensives got dumped. It finished as a late-day save, not a clean, broad rally. Pull up the S&P 500 Heatmap, and it looked like two markets at once. Big green pocket in financials, but staples and healthcare, just a sea of bright red. And in semis, it wasn't a broad surge, it was a split screen, a couple of names glowing green, others bleeding red. Participation just didn't match the record close. And that split on the screen told you exactly where the money went. Traders rotated hard out of classic safety, staples and healthcare, and into cyclicals, especially financials. Communication services helped too. But on the growth side, it was surgical. The market paid up for specific AI and memory leaders, not the whole tech complex. All of that rotation came with real tension in the background. Headlines on the Iran war and Strait of Hormuz shipping risk kept traders on edge, and oil popped on the risk premium. But equities didn't trade like a clean risk-off day. It was more like, buy what's working, sell what's crowded, end the day at records with breadth still not confirming. On chatter, there wasn't a clean list of hard rumors in today's notes. What really shaped the vibe were fast-moving narratives, especially around the Iran war and Strait of Hormuz risk. There was also commentary about heavy call activity in Nvidia. But keep the line clear here. Narrative and positioning talk is not the same thing as confirmed news flow. Nvidia was the lifeboat stock today, up about 4%. That's what kept the Nasdaq and the S&P 500 pinned near records, even while the broader map leaned red. Options commentary pointed to heavy call activity, backing up the idea that leadership is concentrated right here. Micron ripped higher, up about 5.5%. The notes frame it as post-earnings and guidance afterglow, with the AI memory demand story still well bid. And it mattered, because it helped define the session. Semiconductors were not moving as one block. AMD was the other side of that semiconductor civil war, down about 3.8%. The catalyst in the notes, a Northland Capital downgrade, pointing to stretched expectations and competition worries. Same sector, totally different tape. That's the story of the day. JPMorgan gained a little over 1%, and it worked as a clean read-through. Financials were the backbone today. When the banks show up as a solid green block on a day defensive's crack, that's rotation with intent, and it helped offset the damage in staples and healthcare. Walmart slid about 1.8%, and that mattered because it's a defensive bellwether. The notes talk about staples liquidation and valuation pressure. In plain English today, the market treated safety as the source of funds, not the destination. T-Mobile dropped about 3.7%, and this one was very stock-specific. The notes flag pre-earnings caution, with its report coming the next day, April 28, 26. In a market obsessed with selective leadership, that kind of pre-print move becomes its own spotlight. Looking to the next session, the setup is pretty clean. 1, it's a packed earnings week, and big reports can steamroll everything else. 2, any update on the Iran war and Strait of Hormuz can keep the oil risk premium front and center. And 3, here's the real test. Can the generals keep carrying the indexes without broader help? Watch Nvidia and Micron for leadership, AMD for damage control, T-Mobile on earnings risk, Walmart as the defensive tell, and Goldman Sachs as a check on financial strength. So yes, records on the scoreboard, but today was all about what happened underneath. Heavy rotation, defensive selling, and a narrow group doing the heavy lifting. If that leadership holds, the indexes can stay fine. If it stalls, the weak breath becomes the story fast. Next session, let earnings and the oil headlines tell you what really matters. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.